The S&P 500 has returned 15% in the first half of the year with an unusually smooth ride. So what are your thoughts on the performance so far this year for those that feel they may have missed out on this run? What do you recommend?
This is why holding long term is key. Blockbuster year. So as a result, when we are up this much halfway throughout the year, we usually either end up 26% positive for the year, or we end up 8%. I know there's a lot of analysts predicting a 30% drop from here. I don't see it happening. I don't know where you're getting your numbers from. If you get the new iPad with the Chat GPT in it, you'll see that your mathematical formula is off. So maybe you need to adjust. But I think we should end up at least 21% up for the year. The biggest lesson is to hold ETFs and indexes for the long term. I don't know. I know two index has almost become like catchy and gimmicky at this point, but there's a reason why. If you look in 2020, SPY was at 227. It's now at 545. So through COVID, through presidential concerns, through leadership, through sector rotation lies, this has continued to go up. So pick one that you want to invest in, hold on to it dearly for 5 years, 10 years, and you'll be good.
So you're saying 21%, that means that we're going to, at minimum, climb another 6%. If I'm hearing that correctly.
Yes, if you hear me correctly.
That's great, because here's what the math has shown. Over the past 40 years, the S&P.
You pulled out the almanac?
Yeah, you know.
I've
been known to do a little research. Okay. So over the past 40 years, the S&P has gone up in double-digit percentage in the first half of the year. Out of those 14 times that it's done it, it's gone higher 12 times. So that's 86%. Right? On average, when it does this, it goes up on average a minimum of 10%.
Oh, wow. Okay. I'm under.
So, yeah, right. You're right. I mean, if you're saying 6, that's actually undershooting it. It actually does 10% higher. And so, I mean, that's a lot. Pretty good research, right? We're talking about 40 years of data. And it comes down to what these tech stocks do pretty much.
Absolutely.
In the first half of the year, NVIDIA contributed to 30% of the gains in the S&P. Think about that. Microsoft, Alphabet, and Amazon collectively, those 3 companies collectively contributed to 26%. So you got 4 companies that have contributed to over 50% of the gains in the S&P. 4 companies. So people came into this year. Obviously, 2023 was a rebound year in tech from 2022. We all thought the Fed rate was going to happen. 6 of them. That hasn't happened. We got 0. But NVIDIA and the AI revolution has carried it for the first half. The question is, so people are asking, should they get in? Well,
yeah.
What are your thoughts on the AI revolution? What do you think about NVIDIA? And with the presumed, let's say, 2 Fed cuts, that will probably happen, do those conditions warrant you to say, yes, it's time. This is based on the research that I've done. This is a time that I should get in. People talk about pullbacks all the time. Can it happen? Yes, it's happened 2 times out of the last 40 years when the S&P has had a double-digit gain. So is it possible? Yes. What does the historical data show us? 86% of the time it doesn't.
Yeah, we can make this more complicated than it needs to be, but
it's
always a good time to invest in the S&P 500. That's the whole point of it, index fund. And any research, whether it's Warren Buffett, whether it's Paul Tudor Jones, everybody has always championed index funds as the safest way to invest by dollar cost averaging, by putting amounts of money into it every single month, because you get the total market. And so it's never a bad time to invest in index funds. That's the easiest way to go. Like I said, we can make it more complicated if you want it to. If you want it to be more complicated, because you feel like that's going to help you in your quest for superior information, and you feel like you're a market expert. But the short answer is that you should always invest in the S&P 500 every single month, because that's the most intelligent way to actually go about it, and it's the safest way to go